Alrighty, guys, let's go ahead and get started. Thank you guys for joining us today for our weekly webinar for January 21st through January 26th. Let's go ahead and jump right into things. Today, we are going to be talking about some good technical analysis for the week. If you guys are hopping on for your first time, my name is David Schinkel. I'm the CEO and founder of Positive Traders. I do this free weekly outlook just about every single Sunday for you guys for free to give you guys my bias and outlook for the week. With that being said, please do not take this as financial advice. Please do not be using my own analysis or taking trades just based off of what my bias in the markets. Please be using your guys' own analysis, your own risk analysis before you guys jump into your own trades. So that is just my little disclaimer as usual. As far as updates go for Positive Traders, guys, I am excited to announce that we have linked up with Mr. Jonathan Cellini. Some of you guys may know him. He is a lifetime member of Positive Traders, has a pretty good presence on social media as well. He has been very in the crypto space for the past couple of years, and we are going to have him running a joint crypto webinar with me each Wednesday for our lifetime members of Positive Traders. Kind of give you guys, maybe some good setups that we see, some good coins that we're looking at. It's just going to be a little side thing, though. I do want to reinforce, my focus is 110% with Forex, as it always is. If you guys are a part of the trade copy or part of the 400 accounts that I manage, we made about 5% just last week. The market conditions have been really good for scalping, and I forecast that they will continue to be throughout this year. Just looks like a really good year to be trading. Probably it already looks a lot better than 2017, so I'm very excited for the rest of this year. Other than that, guys, let's go ahead and just jump right into things. If you guys are new to the webinar, I'm going to be dropping some nuggets towards the end of this webinar. I'm going to be showing you guys pretty much exactly how I am successful in the markets from a fundamental standpoint. I'm going to show you guys exactly the strategy that I use to be successful long-term, how I'm able to profit long-term. I'm going to show you guys how I built a couple $1,000 account into a multiple six-figure account using the specific strategy that I'm going to show you guys. So if you are new, if you haven't seen that before, I've shown this before on some of my previous weekly webinars, but I will show you guys exactly how I did build a couple $1,000 account to a multiple six-figure account before the end of this webinar. So stay tuned if you want to see that. But let's jump into things, guys. Looking at the economic calendar first, as we always do. This whole week has a couple key risk events. There's a lot of, well, not a lot, but there is a good amount, a healthy amount of high risk or high impact news throughout the week. I'd say most notably our key risk events for the week is going to be tomorrow. We do have a monetary policy statement and policy rate for the Bank of Japan. It does look like they're going to be keeping interest rates the same at negative 0.1%. We can see that over here. The forecast is for them to keep interest rates the same. But this is high impact news. Anytime a central bank is releasing interest rates, whether they're raising them, lowering them, or keeping them the same, we generally see a lot of volatility behind those, behind that currency. So if you're trading pairs like we look at, like pound yen, dollar yen, things like that, some of you guys may trade other pairs like AUD Jappy, CAD Jappy, other pairs like that. You definitely expect some high volatility tomorrow with the yen. So that is something to be on the outlook for. The other key risk event this week, there's a couple other high impact news, but a couple things is we have some quarter over quarter. You guys should know that there are three main time frame reports that come out. So you have starting from the least impact and going to the highest impact, you have month over month, quarter over quarter, and then year over year. Okay, so respectively, of course, year over year is going to be the highest impact, just because that has more data, more data behind the report. So quarter over quarter is right in the middle. It's obviously a little bit more higher impact than month over month. So we do have quarter over quarter CPI for the New Zealand dollar on Thursday, and then Friday to end off the week we do have the advanced GDP for the dollar quarter over quarter. And if you guys are familiar with the ratio of currencies in the Forex markets, the US dollar makes up over 50% of the volume in the Forex markets, about 60% of the volume in the Forex markets. So that being said, pretty much any high impact news that has to do with the dollar, you can expect there to be a lot of volatility all around the dollar. We also have some preliminary GDP quarter over quarter for the pound on Friday as well. So lots of CPI GDP coming out this week. Keep in mind when those are coming out, guys. Again, this is Australia time right now. I am in the Gold Coast, Australia for a couple of months out here. So this is all going to be Australian Eastern Standard Time. Of course, if you're in the States, you'll need to go over here. If you're in the States or somewhere else in the world, you are going to need to go over here in the top right to the time and then change it to your time zone. So all of these times correspond properly to what time they are where you are. But let's jump into what most of you guys are looking forward to me going over the technical analysis for the week. We'll start off with the dollar index. I posted a little bit of a trading idea in the different channels in the free group and the premium group last week. I posted this trading view idea that I think the dollar index is going to pull back. I also mentioned this on last Sunday's webinar that I'm expecting a pullback on the dollar index. I'm expecting a little bit of a correction, and we aren't quite getting it. We started to get it. So if we actually, so I'll just quickly exit out so you guys can see. We started to get it. We started to get that correction. So I actually posted that when price was all the way down here, and we did start to get that correction, but we very quickly just found some consolidation. I still believe that we need to see a correction in the markets. If these lows from last week are broken, then we'll probably continue to see a sell-off down further. But what I would be a little bit more biased to is seeing a little bit more of a correction, and then possibly a deeper dip on the dollar index. But I think a correction is needed first, and this is what I'm going to be looking for in the markets, just based off of market structure, price action, wave theory, just kind of everything combined, correlation. I'm expecting this pair or this index to move up. That being said, with gold, you guys should know, I've gone over this many, many times on our weekly webinars, and this should just be a rule of thumb that you should know when you get into the Forex markets. If you don't, a strong dollar is generally a weak gold. Weaker dollar is usually stronger gold. So it makes sense that we have seen a recent rally in gold over the past few weeks, seeing that the dollar index has also been on a fairly large dip. So we're seeing a weaker dollar currently. So we're seeing a stronger gold. I told you guys actually down in this area when gold was around the 1300, 1310 area that my next target was around the 1350. So we did get very close to that area. We got towards the mid 1340 range before a pullback. If you guys were in the premium webinar last week, even on Sunday's webinar, I believe I mentioned this, that I was expecting a pullback down to this red dotted line. I think I actually put this on last Sunday's free webinar. I think a pullback is still necessary on gold. I think it's still going to correct a little bit lower. I think we are going to actually touch the 1322 area sometime throughout the week. That is, of course, respective of the dollar finding some strength. So if we do find that correction to happen on the dollar, then we are going to find some weakness on gold. And that's what I'd like to see. Also with Euro USD, we did gap up higher. I think this was definitely due in part to the U.S. government shutdown. If you guys are not aware, over the weekend on the 20th, or so that was technically Friday. I believe. Let me just double check the calendar very quickly. Actually, no, that was Saturday. So midnight on Saturday, the U.S. government did shut down, as they are kind of in a limbo of budget and spending. It has a lot to do with DACA. I'm not really going to get too much into it, guys, but there is a couple big pieces on the table that are affecting or that are creating the government shutdown right now. So DACA, if you guys are familiar with DACA, has to do with the immigration laws in the U.S. right now. That's has a big factor of why the government shut down as well. So I think that personally, I think is why we saw Euro USD rise, that we saw some weakness in the dollar over the weekend. But we know that the markets tend to move from a technical standpoint as well. I would like to see some downside. I'll just get right into it, guys. I would like to see some downside on Euro USD this week. Okay. I don't know what that channel is. Sometimes Trading View glitches out, but I did not write that channel. So I would like to see some downside on Euro USD. I'd still like to see around the 121 area retested before this pair moves any higher. I really don't see the resistance being broken this week. I don't see. So if we just very quickly plot last week's highs, 123.22, I really don't. Oh, where I sold. Let me delete that. I really don't see these highs being broken this week yet. I do think we need a correction before going higher. Just again, based on market price action. Also the way the weekly candle closed. We got a very nice weekly candle close on Euro USD. We didn't look at the weekly candle on the dollar index or gold, but we got a very, very nice exhaustion candle on the weekly candle. After last week's, or after the couple past weeks, very big rallies on Euro USD. So expect a pullback on Euro USD. This is just my opinion, guys. I only have about a 75% win rate in the markets, which I still think is excellent in terms of long-term success rates in the markets. That's been tracking it for about a year now. I know profitable traders that, win 50% of the time, 40% of the time. It all comes down to risk management and risk reward at the end of the day. One thing that we're going to be going over at the end. Again, some of you guys that just hopped on, if you guys stay until the end, I am going to actually be breaking down the exact strategy that I use and have used to become successful, turn a couple $1,000 account into a multiple six-figure account over the past 4 years. So we'll be looking at that at the end. So expect a downside on Euro USD. That being said, if you guys are familiar with correlations, if we are expecting some downside on Euro USD, I am expecting some upside on USD Swiss franc. Sorry guys, the Wi-Fi. If the Wi-Fi is a little bit laggy, watch the replay. I really apologize. This Airbnb out here in Australia, actually all of Australia, the Wi-Fi is pretty terrible. If you live in Australia, you guys can attest to that. It's like a known thing, Wi-Fi being bad out here. For some reason, they are a little bit behind the ball on Wi-Fi. It's harder to get faster than like 10, 15 megabits per second anywhere out here. So streaming a live webinar is not the easiest. So I do apologize, guys. But anyways, with USD Swiss franc, I am expecting a pullback. I'd like to see a rise on USD Swiss franc. I'd like to see it at least retest this resistance trend line, which acted as support in the past, or maybe even come back up to this 50% retracement level before moving lower. So long-term bias overall, guys, on the dollar, I am, to the downside with Euro USD. I think this year we're going to find some more highs. I think, USD Swiss franc, we're going to eventually find some more lows with the dollar index. I think we're even going to eventually break some more lows. But the market needs a good, healthy correction for us to be able to move lower. Very similar to kind of what happened in the cryptocurrency markets, guys. I know there's a lot of, I saw it all over social media. There's a huge pullback on Bitcoin. I think it dropped down to about like $9,000, which is just a healthy correction, guys. I think Bitcoin long-term is still going to see probably before the end of the year, somewhere between 30 and 100K before the end of this year, probably closer to 50 between 100K before the end of this year. If I would be able to speculate on that, or potentially even higher, but as cryptocurrency becomes more massive, more mass adoption happens with cryptocurrency, I think we'll see some more strengthening on it. But I don't think, I saw people online talking crypto's crashing. Guys, I don't think crypto is something that can be stopped. It's something that is actually solving real world problems. It has a real world application, and it's, very powerful. So it's also largely decentralized. So it's hard to regulate something like that. It's like, how would you kind of crack down on cryptocurrency? So that's a whole nother story. But that I just wanted to kind of bring that up to, kind of relate to corrections in the markets. So let's look at the pound pairs. Pound pairs, I'm really not too interested in trading, honestly, guys. We haven't really traded the pound pairs the past week or two. All of the scalps that we did last week were on pairs like Australian dollar, US dollar, New Zealand dollar, US dollar. I think we even got a USD Jappy in there, but a lot of Euro USD in there. And I think there's even some USD CAD. It's pretty across the board except for the pound pairs. Pound dollar, I would expect a pullback on pound dollar though. I would, if I had to speculate on what would happen with this pair, I think we'll see some downside. We've seen a pretty significant rally. We can even kind of put in this little bit of a support trend line to watch for a break of this support trend line. Something along the lines of that. Once that support trend line breaks, maybe look for a retest or some sort of flag to be created. Something along the lines of that before dropping lower, or we might break this, retest, drop, accumulate some orders, and then drop. Could be a different variety of price action that we see to get a sell on this pair, but I think some short-term downside on this pair is fair. Let's look at pound yen. Pound yen, absolutely just completely on the sidelines, guys. I'm not really interested in trading pound yen. Generally, when we see dollar strength, we see this pair move higher. So if we are going to see a little bit of dollar strength, we are going to see that correction on the dollar index. We may actually see this pair move up, which also could cause pound dollar to move up, which is why I'm not too keen on trading pound dollar right now. So we're just going to kind of sit on the sidelines with both of these pairs right now. I'm not going to really speak on them. I don't really have a strong bias on either of these like I do Euro USD and USD Swiss franc and gold. So we'll move on. Dollar yen. Okay, so of course we want to be careful with dollar yen. That we do have, we talked about at the very beginning on the economic calendar. That I'll very quickly switch that. Beginning of this week, tomorrow, we do have Bank of Japan policy rate. They are going to be releasing their interest rate decision for Bank of Japan. So that is going to create a lot of volatility, as well as they're releasing a monetary policy statement. So that's actually something that you can go and read generally. You can click right here and you can click latest release, and that's going to bring you to the actual Bank of Japan website. And then on the minute, right when that policy statement releases, you will be able to read through that and kind of understand the outlook and sentiment behind the leaders of the Bank of Japan, right? And then that can help kind of create a bias, and that is ultimately what moves the markets, right? That creates sentiment with investors, the people that actually move the markets. If you guys are new to Forex, you should know this, that us as retail traders, us as the millions and millions of retail traders that we are, we don't move the market, right? We may move the market a very, very, very tiny amount, but the majority of the movements, I would even go as far as say we probably don't even move the market at all. The majority of the markets are moved by the key players like banks. Banks is a big one. Hedge fund managers, the people that are managing tens of billions, hundreds of billions of clients' funds. Those types of people, the people that are, you guys have to understand that the market is over a $5 trillion a day market. So to be able to move, to be able to have any influence on a market that is over $5 trillion, that does over $5 trillion of movement a day, you're going to have literally hundreds of billions of dollars to be able to have really any effect on what the markets do. So keep that in mind. So what is my outlook on dollar yen? What do I think is going to happen? Well, we had a really nice weekly close, very similar to the opposite of Euro USD. Previously, the week before last, we had a very, very strong bearish week. Okay, so we were expecting a little bit of downside at the beginning of last week, which we did see. We can see based on last week's candle, we did see a little bit of downside on dollar yen, but ultimately we created a little bit of support, and I think we're going to still find a little bit of a pullback. I think the markets still need to correct. I mean, that's the whole premise of what I'm going over with Euro USD, the dollar index. I believe the markets need to correct to be able to ultimately go to continue in their long-term direction, which is, down for the dollar, up for Euro USD, and down for USD Jappy. So that's what I would expect to happen in the markets. As far as trading setups on dollar yen go, we obviously gapped pretty low this week. Look for a pattern very similar to like what happened here, where we actually broke above this level of support. Look for some sort of order accumulation in this area. And then look for that to break. Look for this to go higher. Look for market structure to go higher this week. But I do think that as the week progresses, I think that as we get in towards the middle of the week, I think Euro USD is going to show us some very good signs for the downside. Dollar yen is going to show us some good signs for the upside. I'm, of course, not interested in even touching dollar yen until after the rate statement. But I want to go over these two pairs to finish it off. And then we'll look at USD CAD, of course. But AUD USD and NZD USD, I'm very interested in getting in a trade on these weeks, getting in a trade on this week. The daily candle and the weekly candle close were pretty nice for both of these pairs. We're going to look at them individually. But specifically the daily close on AUD USD, our Friday daily candle close, we got a very, very nice exhaustion candle. Also retesting this weekly resistance. So if we actually pull back, I know there's a lot of lines on this pair, guys. Maybe I can clean this up a little bit for you guys since we're just to kind of remove a couple things. Let's clean this up just a little bit. So a lot of these things are pretty key to keep on here. I like keeping these old trend lines just to look at previous market structure if it happens in the future. But if we kind of like zoom out a little bit, you guys can see that there is this weekly resistance where we found some resistance in the past on. I'll just circle it very quickly. So right here and right here. And we're finding the market's finding some resistance on this pair right here. So it'll be interesting to see what happens. I think, again, long term, I think we will still see some upside on this pair, but I think a short-term sell on these pairs wouldn't be bad. I think we're probably going to find some sort of retest somewhere around this trend line and then probably end up going higher. Of course, we're going to have to reevaluate price action when price comes down to this trend line, but I think a retest of this trend line looks to be the most probable scenario right now. We've had a very strong rally on AUD USD the past few weeks. And again, just like we've been talking about a correction being healthy in the markets, we do need a healthy correction for this pair to go higher, in my opinion. So I don't think it's just going to go just higher right away. Just like I don't think the dollar index is going to drop right away. I think a correction on the dollar index is necessary. And of course, if we see that correction on the dollar index, we're more than likely going to see a correction on AUD USD as well. And so this would be my first target for if and when I do get in a sell position on AUD USD. NZD USD as well. We're going to look at NZD USD as well. It is currently at some major weekly resistance. So if we throw this pair onto the weekly chart and we look at price, we can see a pretty major area of resistance that we've been at in the past. Okay, so this area right here, area right here, and area right here. Of course, obviously we had this breakthrough right here, which was a major fake out on the weekly time frame for it to go lower. But this is kind of like the range that we've been in long term for over a year on dollar yen. Actually, not quite a year yet. Late April will make a whole year that we've been in this range. But we are still in this range. So expect a bit of a pullback on this pair. And now what I'd like to do is I'm actually going to flip this fib around, and we're actually now going to look at a retracement on the downside where we may be looking at possible targets. So we had that side previously fibbed out because that was our previous swing. Now this is our previous swing, the current move to the upside. So we'll go ahead and mark off the bottom, and we'll go ahead and mark off the chart just so we can very quickly see our institutional levels of retracements to the downside. So of course, we're probably going to see some support around the 23.6, and then if it goes down further, the 38.2. And these are actually some pretty nice confluent areas because we can see where we actually found some previous resistance at before moving higher is also the 23.6% retracement level. Where we found some resistance at in the past is also the 38.2% retracement level. And then we have the 50% retracement level, which is kind of in between the support of that and the resistance of this. So some good confluent areas. I really think, so if you guys are in the premium group, you guys are wondering what I might be interested in scalping this week or looking towards giving out trade calls on this week, probably leaning more towards these two pairs and Euro USD. I like the overall price action and just structure of these three pairs right now. And then finally, USD CAD. not super keen on getting into USD CAD right now because they did have their interest rate decision last week. If I believe right, I believe USD CAD rose their interest rates from 1% to 1.25%. Let me see. Yeah, it's 1.25% now. You can actually go, kind of cool. If you guys didn't know about this, there's a little cheat sheet in the bottom left on Forex Factory. It shows you all of the current rate statements or interest rates in all of the respective currencies, countries. So the Canadian dollar is now at 1.25%, where last week before the rate decision, it was previously at 1%. So not super interested in trading USD CAD right now, but I think we're going to see some short-term upside. I think that we're going to make a little bit of a correction still. It could be one of two scenarios. We could either see maybe like a double top form in this area, or the correction could go deeper and we could see it go all the way up to this previous support of this range before moving lower. So long-term downside on USD CAD, short-term upside on USD CAD. Okay, guys? So very quickly, I want to go over just one thing with you guys. I promised you guys I would go over my strategy. Many of you guys, I'm sure I see a lot of familiar faces in here, people that have been following for months and months or even years now. But there are a couple of new faces. I always see some new faces on these webinars, and I know some of you guys don't go through my entire previous webinars, so I like to do this as a refresher. So I will start with this. Many of you guys, I get a lot of questions. I'm going to show a whiteboard, so you guys should see a white screen right now. I literally get questions on the daily from people asking me, hey, David, if I join Positive Traders, can you take, how can you take my $1,000 to, $1,500 in a week? That was actually an exact question that I got this week. A lot of people ask me, how many pips do you catch in a month? I want you guys, if you guys want to take Forex seriously and you really want to, understand the psychology behind Forex, pips don't matter. Okay. And the reason why pips don't matter is because you could make 100 pips or you could make 30 pips, and you can make the same amount on a 30 pip trade as you did your 100 pip trade. The only thing that matters is the lot size. Now, I'm not saying to use a larger lot size. You should always be risking 2%. Now, I'm going to show you guys how to know how to risk 2%. But this is the premise of my strategy, guys. This is broken down in the most simplistic form that I can show you guys, and how I've literally been able to take a couple thousand. Of course, I started Forex just like everybody, right? I'd load my account with a couple $100, blow it. Load my account with a couple $100 because I didn't understand that Forex is really long term, right? I saw Forex as I saw the gains, the fast gains that you can get on a demo account, and I thought to myself, well, I can do that on a live account. Well, it's not like that. When your emotions are in the markets, it's very different, and it's not about what you can do with your money in 1 week or 1 month or even 1 year. It's what you can do on a long-term spectrum of 5 to 10 to 15 years in the Forex markets. But in my opinion, I see it as if you compare Forex to something like I know if you live in the US, there's things like 401ks and IRAs, which are retirement funds. If you're in Australia, they call them super funds. I forgot the other name for in Europe, but you guys know what I'm talking about, right? Depending on where you live, you probably have some sort of like retirement fund that like everybody puts a little bit of money into, and it grows, a couple percentage a year. And then after 30, 40 years, 20, 30, 40 years, you have some, maybe $1 million or something like that. And that's good, right? I mean, to the average person, you maybe, waiting 30 years to get $1 million is good, but I like to find a way to accelerate that growth, and that is something that Forex can do for you. So Forex is not a way to get rich quick. It is a way to accelerate the compounding of your retirement account or your growth of your investment accounts. So here is the strategy that I go off of, guys. All right, and this is the basics of it. So we're gonna take 10 trades. All right, and let's take 10 trades. And out of these 10 trades, this is the strategy that the average, and I'm sorry, my handwriting is sloppy, guys. I'm just writing with a trackpad, not anything else. So out of 10 trades, if you take 10 trades and let's say 2% for 4%. So every single trade you place, you're risking no more than 2% of your account. So if you have a $1,000 account, you're never risking more than $20 per trade, or at least, the first trade that you would place, because that balance is going to change, right? So if you lose, that trade, for example, you have $980, where 20% of $980 is going to be $19.60. Okay, so, and I'm going to show you guys how to figure that stuff out, the 2%. Don't sweat about that, okay? Stick with me. So every single trade you place, 2% for at least 4%, okay? It needs to be an average. Out of those 10 trades, you need to average at least 2 for 4%, okay? There's going to be times where you're going to risk 2% to make 6%, or even 2% to make 10%, right? You want to increase your risk. You want your risk to reward to be as good as you can on your trades, but 1 to 2, this is a 1 to 2 risk reward. Okay, if you guys ever see me posting about a 1 to 2 risk reward, that is mean I am risking 1 to make double that, risking 2% to make double that. So 2% for 4%. Now, this is where I hope some of you guys really understand that you don't have to win you don't have to win 100% of the time. Some of you guys think that you need to win all of the time, right? I see some of you guys like, oh, you have a 50% win rate. You're a terrible trader. Absolutely not, guys. You can win 50% of the time and make millions of dollars in the markets. It's all about the way you set up your trades. So let's take this and let's say you win 5 out of 10 trades. Okay, so you have 5 that win. I'm just going to put a W, and 5 that lose. We're going to put an L. Well, you plugging this formula into those 5 winning and losing trades, if you have 5 winning trades that make you at least 4%, right? At least 4%. And that is going to be obviously quick maths, guys. 5 times 4 is 20%. So that is 20% gain. That is a gross 20% gain. Okay. And if you have 5 losing trades that lose 2%, quick maths, guys, 5 times 2 is negative 10% because you lost 2% on all 5 of those trades. Okay. So if we plug this in, that is 10%. Okay. That is a net plus 10%. Now, just to be even more conservative, to put the odds even more against us, let's just say you did half that. You did 1% for 2%. You lowered your risk. Well, it'd be half of all of this equation. So you'd be sitting at plus 5%. Okay. And this is what I aim for in positive traders, between 5 and 10% per month. This is what I would like to average. March 1st will mark 1 full year of running the trade copier based off of these signals we have given in the markets, or in the premium group. We've done a little bit of scalping here and there, which we're going to get into, but this is my long-term goal for the accounts that I manage, is for 5 to 10% per month. Okay. Now, also heard a lot that when I tell people that I aim for 5 to 10% per month, usually I hear something like, wow, David, that's not a lot, right? 5% is a little on the low end. Right? I have groups that are offering me to do 50% a month or 20% a month. Well, first off, that's not consistent. Okay. Guaranteed you don't know people that can do that consistently. Okay. If they do, I'd love to meet them. If they have some sort of verified real track record, some sort of substance to go behind, I'd love to meet them, but guaranteed they don't do that long term. Okay. I'm going to show you guys why also at the end. And I have another little nugget to drop for you guys, but let's just plug in this 5% in I want to show you guys how powerful this 5 to 10% is. So very quickly, let's go back to our chart and let's pull up a compounding calculator. Pull up compounding calculator. And I'm going to show you guys what 5% can do for you. Okay. So let's take $1,000, just $1,000, and say 5% a month for the next 10 years. Well, at the end of 10 years, you're going to have $348,000, $348,911.99. Now, in my opinion, someone that is doing this long term, they aren't just going to put $1,000 into their account, right? You have to keep in mind that this scenario right here, guys, is only ever putting $1,000 in, right? This is not including, let's say you put $1,000 in after the end of year 2, $1,000 at the end of year 3, $1,000 at the end of year 4. This number is going to be much, much higher. If you were to start off with $5,000, you're going to have $1.7 million after 10 years at 5% per month. So this is the power of compounding, guys. So if you want to be long-term successful in Forex, you need to get out of that mindset of flipping your account. Okay, I see too many people online preaching, that it's possible to flip your account. Is it possible to flip your account? Absolutely. Is it physically possible to do that? Now, is it consistently possible? Absolutely not. You are not going to be able to flip your account every single month, month after month for the next 2, 3, 4 years, or even the next 6 months. It's not possible, guys. So this is the way I have built my wealth in the Forex, in the Forex markets. I literally, after about a year of being in the markets, just constantly blowing my account, not learning, and then finally taking Forex seriously, I took a couple $1,000s and I was like, okay, I'm no longer going to go high risk. I'm going to understand risk management, risk reward, and I'm just going to be truthful with myself. And from there, I let my account grow. Okay. So that is the way you can be successful in the Forex markets, guys. You don't have to make 20%, 30% every single month. And I want to show you guys one last thing. I showed you guys this last week, but I'm going to show you it one more time for those of you guys that missed it. This right here is a chart. Many of you guys may see some very familiar names. We have George Soros on here. We have Warren Buffett. We have Richard Dennis. There's a lot of familiar names on here. But these are the top 69 traders in the world, right? Some of them are living, some of them aren't living, but the top 69 traders that have lived. And this shows you their average yearly return for how many years they did that on average for. Okay, so if you look at, like, for example, Warren Buffett, right? For the past 54 years, he's averaged 23% per year. Per year, guys, get that through your heads. 23% per year. And Warren Buffett is a multi-billionaire, guys. He's one of the wealthiest men in the world. And he does 23% a year. So stop trying to do 23% every week and focus on the long-term growth. Positive traders, between March 1st and the end of last year, we did 40%. Okay? 40% on our trade copier between March 1st and the end of last year. Okay? So we're on the higher side. So we are, in my opinion, I think we are giving some phenomenal returns. Okay. Now, if you were to add up all of these people's returns, all 69 of them, and divide that number by 69 to find the average, which I did, that average is 31.9%. So the top 69 billionaires and millionaires in this world that have really made it in Forex have averaged 31.9% a year. So if you can get even close to 31% a year, which, if you break that down, what's 31.9 divided by 12? That's 2.6% per month, guys. So if you can average 2.5% per month, you are up there with the likes of the big guys. Okay, so it all breaks down to perspective, guys. Don't get clouded by the people online that are flashing cash and showing that you can flip your accounts and showing you they'll give you 1,000% return in a month, things like that. Don't trust it, guys. None of them have track records. I very rarely, like, literally, guys, I'm not even trying to sound arrogant, but I really don't see anybody else online in our social media niche at least that has a track record. I see lots of people flashing cash. I see lots of people taking screenshots. I see lots of people, claiming to get these crazy returns, but I really don't see anybody with a double check verified MyFX book with more than 6 months. We have 10 months on ours. So I'm not trying to say we have multiple years yet, right? We will have multiple years eventually, but we still have some substance, something to base some future returns off, something that shows you guys that I know how to manage my risk. I know what I'm talking about. I am preaching. I practice what I preach. So I'm very proud of that, guys. Take a lot of pride on that with Positive Traders. So that's that, guys. Right now we have 15% off our lifetime membership. If you guys want to get in, the code is 2018 on our website. If you have any questions after watching this, feel free to reach out to me through social media. Probably Facebook is the best way to get a hold of me, or Telegram. But feel free to reach out to me through Instagram or any other social media platform. If you guys are free members, I look forward to seeing you guys again on next Sunday's weekly Outlook webinar. If you guys are premium members, I'll see you guys in a little bit less, or in about 24 hours on tomorrow's first daily live webinar of the week. If you want to learn a little bit more about what Positive Traders do, what we do in our group, feel free to shoot on over to our website. It is positivetraders.us. And that's a wrap, guys, for the week. So again, just a very quick recap. Overall this week, I am expecting a correction on the dollar. I'd like to see a little bit of dollar strength all across the markets this week. So we'll go with that. Again, guys, please use your own analysis before entering other trades, but I look forward to seeing you guys and talking to you guys again. Have a wonderful week, guys, and I'll see you guys all later. Have a good week, guys.